Well, yes, absolutely, certainly. In fact, you just mentioned sort of the gyrations of the pound up and down, and I think that's a reflection thereof. Because at the end of the day, the key question, I believe, for investors is, obviously, one part is what kind of Brexit deal ultimately will be put through Parliament. But the bigger question, I think, is there somebody around to push a Brexit deal in the first place? And obviously, if you come to a point where the government potentially is being toppled, and that increases the uncertainty, not only about the timing, but obviously also who's going to follow. And I think that's one of the key questions that investors will have to look out for.
Well, I'm going to ask you a key question. How likely is it that Theresa May, in your view, survives until March next year? And what does that mean for markets?
Well, first of all, I think it's almost impossible to put odds on it, although there are obviously betting odds out there that you could look at. But I think the broader question ultimately is if we approach the October deadline. I don't necessarily want to talk about the March deadline, but if you approach the October deadline, which is supposed to be the point in time when an agreement with the EU shall be struck, do we have at that point a majority in Parliament to vote for whatever has been agreed, yes or no? And if that's not the case, irrespective of whether she stays in power or she doesn't stay in power, whether somebody else gets in or not, or whether we have a general election, if we do not have a majority in Parliament for whatever has been agreed at that point in time, then the odds of a no-deal scenario, of a no-deal that can be agreed with the British Parliament, increases substantially, irrespective of who's going to be in government.
Counter-argument to all this is that Parliament here in the UK goes off on its summer holidays known as the recess in just a few days' time. Theresa May has won what was seen as a crucial vote of the Customs Union last night. Her position, potentially after this recess begins, could be safe. Is there no reason that investors could just stop worrying about this till September?
I don't think so, not at all. Quite to the contrast, actually. It's quite possible, in fact, very likely, I think, that she will survive until the recess kicks in next week. However, one of the things you have to remember is all of the MPs, they go back to their constituencies, and particularly the Conservative MPs tend to be less leave prone, if you want, on balance than their constituencies. So they all go back to their constituencies and then they talk to the people on the ground, and the people on the ground will almost certainly voice their dissatisfaction with what's currently going on. In particular, when you look at the latest surveys as regards the Chequers deal, people are not happy with that, particularly the Leave people are not happy with it. And therefore, I think once they come back, we'll really have to see. I think the odds of that deal being pushed forward even decrease after the recess.
You may not be seeing the numbers right now, Peter, but it looks like sterling has really plunged a little bit against the dollar on the back of this latest inflation data in the last few moments. And based on that, and based on the fact that Mark Carney's spoken publicly about the consequences of no-deal Brexit, in the short term, what does all this mean, do you think, for Bank of England policy making, and what does that mean for assets like gilts?
Yeah, so I think we really have to differentiate between the short term, and when we talk the short term, we talk essentially the August bank meeting, and then the medium term. In the short term, I would be extremely surprised if the bank holds off with a rate hike. I mean, they did so in May, and I think it's very unlikely. Everything they have said so far, all the data that has come out, and the data might now be a little bit weaker than the consensus estimate, but on balance, all the data supports their expectations going into this meeting. So hence, if they do not hike rates as we forecast, I would be extremely surprised. Over the more medium term, however, and that's a completely different story, because the path that the bank has mapped out for 2 to 3 hikes over as many years is crucially contingent not only on the economic circumstances but also on a smooth implementation of Brexit. Now, if that doesn't happen, then I think the path is in jeopardy for certain.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.